Welcome back, as we are now in the second half of the fourth quarter in 2025, well after the 18-month time frame since the Bitcoin halving. What part of the cycle are we in? In today's video, we're going to be exploring where we are in the cycle, how we know we are at this point in the cycle. We're going to hear from people who are for what my viewpoint is and people who believe that I'm wrong, but I don't think that I'm wrong based on previous cycles, based on where we are, based on the risk. And we're also going to explore the economy, the shutdown in the government, Coinbase launching their own coin, Pump.fun, Bitfarms. This is a big one for Bitfarms because as we've been talking about, the Bitcoin mining companies, they have the energy, and Bitfarms has been really ramping up their energy pipeline. Not just in one location like Texas, where many of the Bitcoin mining companies that pivoted to AI are, but they're moving in and they have multiple locations throughout the United States and really are first in line to get all of this energy expansion approved by the government. So we're going to talk about that as well. We also hear some things about what's happening in Nevada with crypto.com and also a crypto custodian that seems to be insolvent. We're also going to talk about the whole artificial superintelligence implosion. I made a whole video about that, and there's some updates we're going to talk about in today's video. So as always, this is the Cryptoviser podcast. We talk about everything crypto, blockchain, and investing every single day of the year. Don't forget to hit subscribe, give the video a free thumbs up, but we're going to start right here with where we are. What part of the cycle is this? And if you guys are new to the channel, just keep in mind, we upload every day on this channel. Sometimes we talk about the macro environment, the zoomed out picture of the crypto and financial markets. That's what we're talking about today. And sometimes we do deep dives into individual assets and cryptos and stocks to see where are the best investments. Now, we are really I think the only chart that actually matters. This shows us the Bitcoin price after the halvings. Now, listen, there is a possibility that we are going to go much higher, as a lot of people are anticipating and expecting based on this and based on that. But at the end of the day, is it worth the risk when every single cycle that we've had in Bitcoin and obviously then therefore crypto has shown that 18 months after the Bitcoin halving, which is basically around the 2-year mark, right? 1.5 to 2 years. That's it, right? Then we have to go into a corrective phase, and then we start getting ready for the next Bitcoin halving. But a lot of people, they either never saw this chart before, they don't believe it, or they just believe, oh, well, Raoul Pal said that we're going to have an extended cycle. Even Raoul Pal said that he is going to be offloading about 30% of his portfolio before the end of 2025. And again, black swan events, things that we cannot foresee that occur. And there are a lot that are kind of wavering around. We just heard this, and I'm going to be doing a whole separate video on this whole trade war situation. But Canada's, I don't know, is he Prime Minister? Yeah, Canada's Prime Minister, Mark Carney, warned of a trade shift after Trump's Canada tariff hike. So Trump increased the tariffs on Canada. And now the Prime Minister, I would definitely go and recommend listening to his comments. But it says here, he warned that trade flows are likely to shift away from the US for a period of time after the decision to impose a new 10% tariff on Canadian goods. And I just read another story that Porsche, the car manufacturer, their profits went from $2.6 billion last year to 110 million, I think it's actually in euros, but around there, right? From 2.6 billion to 116 million this year. That's a huge, significant drop. And a lot of this is because of the tariffs. And so these companies are going to shift, these countries are going to shift who they actually do trade with. This potentially is going to be one of the potential black swans in the market. The other thing that we have to think about is where we are on the psychology of the market cycle. Now, again, like I said, we're going to be deep diving into Coinbase, Pump.fun, Bitfarms, Crypto.com, the Artificial Superintelligence Alliance implosion in just a few minutes. But before we go there, we really have to understand where Bitcoin is, because Bitcoin is the indicator for the whole market. The market is like this idea that your altcoin is going to go up 100x when Bitcoin is wavering or potentially rotating into a bear market. I think that this is way off base, really bad analysis of the market. And again, I'm not here to convince anybody. I'm here to share my analysis and opinions on the market. And I've been correct about a lot of these different things. We called the top of the market in the previous cycle, and I called the bottom of the market to the day, months before it occurred. And we were warning about FTX. We were warning about BlockFi months before the collapse. And all the other channels were saying, oh, sign up for FTX, sign up for BlockFi. Yeah, how did that work out? And so when we're in this part of the cycle, this is part called complacency phase. Now, in the complacency phase of the market, this is where people are, we're sideways trading, which we have been basically in crypto. I called the top of the market back in July when we were around $110,000. Granted, we went higher than that, but we came right back down, and we've been basically flat in that $110,000 range. We haven't really gone up that much. We haven't really gone down that much. And that's basically complacency. And people think that we're down here. Like, there's a lot of influencers and YouTubers and analysts that are saying, "Oh, we're not even in the belief phase yet. Don't worry, we're going to start." And it's like, where have we been for the last year, 2 years? I mean, we've literally gone up from $60,000 or $15,000 at the bottom all the way up to $126,000. And there's people who have not taken profit on anything. In fact, they've doubled down. They're going more heavily into MicroStrategy. We'll talk about MicroStrategy in a little bit as well. Now, we've highlighted Jesse Olson, who is a chartist and a swing trader, also a father. And he said, will this Bitcoin head and shoulders pattern be invalidated? The price is above the neckline, but it's just a bounce until proven otherwise. Now, a lot of people, when they look at a head and shoulders pattern, they look at day to day. I mean, most of my viewers, most of the people who are subscribed to this channel, and if you're not subscribed, make sure you hit that subscribe button. Most of the people who are watching my videos on a regular basis, you guys are on the same page. You understand how this all plays out. But there's a lot of people in crypto space and a lot of people who are like experts in the crypto space that don't understand that these patterns they could play out over the course of days, weeks, hours, or months sometimes. And so the first time I saw a head and shoulders pattern this clear, or similar, I should say, was back in 2021 when we saw Cardano. Hitting what I think it was Peter Brandt called a head and shoulders pattern. And for months after the head and shoulders pattern appeared, we continued to go higher. But if you zoom out now and look at that pattern, yeah, it was over. Effectively, everything after that head and shoulders charted was just volatility in the markets and the market fighting the head and shoulders, right? It's like, when we want to go up, we have bears that are pushing us down, right? And at the beginning of the cycle, but there's more inflows and there are outflows to push the market higher, and there are less sellers than there are buyers. Now, when we're at the end stages of the cycle, and we know most of the insider early money has already cashed out. Look at Nakamoto, look at Strive or Semler Scientific, look at Cantor Equity Partners, which is going to become 21. These are all exits, right? Early investors handing their Bitcoin over for either stock or cash, and then they cash their stock out and they make hundreds of millions or billions of dollars on a very, very small investment. They already cashed out. And you're trusting that, the random YouTuber that has already taken profits, is already a multimillionaire, is like, oh, well, this head and shoulders pattern you could see it in my comments. People will come on the channel, they'll say, well, Cryptoviser, yesterday we hit new all-time highs. And I'm like, well, I'm not talking about day to day. I'm talking about, this is a multi-month pattern. And we can also see the Bitcoin halving chart. We can also see the sentiment in the market. In my view, the euphoria was when all of these Bitcoin treasury companies popped up, because this was the institutional inflows. This was supposed to be the massive run up, and it really didn't happen because most of it was just transfers from early insiders. They weren't actually buying the Bitcoin on the open market like many people thought or anticipated. And then we have a warning from Joe, who is a commercial litigator supporting Bitcoin. And he put out this video on his X page saying it's a warning. And I think this kind of explains the sentiment of where we are in the complacency phase. Because again, we don't hear these type of things at the bottom of the market. At $15,500 when FTX collapsed, we were the only channel here on YouTube that was like, buy this dip. Like very calmly, not emotionally, like none of us on this channel were involved in FTX. None of us had FTX accounts. None of us were promoting it like the other YouTubers. And so the other YouTubers were freaking out. They're like, oh my God, I think Binance is going to drop down next. I think Grayscale is going to go down. What's going on? How low are we going to go? And on this channel, we were prepared because we called this bottom. We didn't know it was going to be FTX collapsing that created the bottom, but we knew it was happening around November of 2022, right? And so we knew that was going to occur, and it occurred. And then what did we do? We bought the market while everybody was freaking out. We bought it. We bought the literal bottom of the market. And there's people who say, but Cryptoviser, 110,000 was the bottom. How could you be selling and telling people that the market's over now? And I'm like, you think 110,000 is the bottom of the market? We're literally at the top of the market, like quite literally at the top of the market. So that means the bottom is much lower than where we are. Anyway, let's listen to this tweet from Joe in the end of October 2025. Said, a warning.
Okay, guys, quick message for you. If you're selling Bitcoin right now because you need to pay down some debt, because you want to put that down payment on a house, because you want to buy your fiance a diamond ring, I don't judge. I don't blame anybody who wants to sell Bitcoin to go after something you really care about in life.
Now I'm going to pause here for 1 second. First of all, why is he playing music while he's giving this warning, right? Is this really that serious that he's playing dance music in the background as he's giving this warning? But what he's saying is true, right? If you're selling to go pay off debt, buy that car that you wanted, buy a home that you wanted, whatever you're doing, right, with the money, even if it's just put it into savings or put it into another safe account until we kind of see how this all plays out in the markets. Because again, the upside potential is maybe doubling from here, but the downside potential is maybe dropping by 50% and losing all your profits. What is the risk reward here? Well, let's continue listening in.
Bitcoin right now, because you're under the ridiculous impression you're going to be able to buy it 50, 60% lower because it's the last year of a 4-year cycle.
Yes, exactly.
If you think that's going to happen, you think just because in the past this has always occurred, that it's guaranteed to happen in the future, you should be prepared to take a big L on this one.
Now, I want to pause here for a second because this doesn't actually make any sense, what he's saying. He said that you're moronic if you think that Bitcoin is going to drop 50, 60%, and that's when you're going to buy. Guys, every trade is independent, right? When I sell a stock or crypto, I don't say, oh, when am I going to rebuy it back at? No. I'm out of that trade. I've moved on, right? Now, I may buy it back in the future, right? But I may not. It really doesn't matter. And by the way, if you think that Bitcoin's going up forever and is never going to have a corrective phase, the 4-year cycles are over, well, there's no actual bad time to buy then. Because those kind of like quote unquote warnings, these never occur in the bottom of the market. In the bottom of the market, people are fearful. They're already down 50, 60, 70% in their crypto, right? I remember at the beginning of this cycle, I said, I'm waiting for 25 cent Cardano. And then Cardano went from like 35 cents to 70 cents and people were coming on my channel. Are you still waiting? Ha ha ha. We doubled in price. And I'm like, okay, but I'm not even in the trade. So I don't give a what happened to that crypto or that stock. If I'm not in it, I'm not losing anything. But if I am in it and we are at the end of the cycle and you think this time is different, just like every cycle before, just like every other asset before, those words are the indicator in my view, right? Somebody telling you, oh, well, if you think this time is different, be ready for a big L. I can't take an L in Bitcoin because I'm not in Bitcoin, right? I can't take an L in MicroStrategy because I'm not in MicroStrategy. So the only people that these messages are really geared towards are the people who are in the stock or in the crypto. And they're making these warnings because they don't want you to sell. Because once the selling begins, and it will, that's it. It's over. And by the way, the selling has already been going on. This is how these Bitcoin treasury companies have been able to acquire so much Bitcoin, because people are selling. They are the exit liquidity, the Bitcoin treasury companies, MicroStrategy. They're the exit liquidity for these people who are selling. When that money dries up, and it already has, because Nakamoto is down significantly. They can't even sell shares in the open market to raise more money to buy more Bitcoin. Semler Scientific can't do that. None of these Bitcoin treasury companies can, except for MicroStrategy. But MicroStrategy is having a harder and harder time buying more and raising more debt. We can see that on the data. But the maximalists will say, oh no, they're still buying. Everything's going to be great. No, it's not. No, it's not. You can clearly see that their purchases have slowed down, even if it picks up for a little bit. Who's buying MicroStrategy? I'm not. You're not. They are. So let them keep buying as they keep getting diluted and have no understanding of this. And then they put out these warnings like, you're moronic if you think that you're going to buy 50, 60% lower. Actually, no, you saying this is making me understand that I am going to be able to buy it 50 or 60% lower. The governments haven't started buying Bitcoin. Other companies outside of these Bitcoin treasury companies, which are all Bitcoin maxis, stop buying Bitcoin. GameStop bought Bitcoin with 10% of their cash, $500 million in the middle of the year, right around the time I called the top of the market. And the Bitcoin maxis were upset with, they were writing tweets to the CEO, you're an idiot, how can you only put 500 million in, not all your cash? Because they understand risk management. And guess what? No other company has done it. All of the promises that this was going to be the Bitcoin cycle, no, guys. Nobody gives a shit. They can just buy the Bitcoin ETF. They can just buy other stocks. They can just buy treasuries. This idea that, oh, well, MicroStrategy is going to keep buying, that's the only thing they have left. And so this time is not different, by the way. Let's continue listening.
You should be prepared to be FOMOing back in above 200,000 where we're going next year.
Oh, now we're going to 200 next year. I thought we were going to 250,000 this year in 2025. I heard the same thing last year, but now they're moving the goalposts. And again, we talked about this before. The cool thing about Bitcoin is you can just say, oh, well, my predictions about the 4-year cycle, about us hitting 500,000 or $1 million, that's actually on a 10-year time horizon, not a 2-year time horizon. And they just keep moving the goalposts. Guys, we are due for a major, massive correction in Bitcoin. And I do believe that this head and shoulders pattern is going to play out. We are going to retouch the Bitcoin buy price for MicroStrategy. Many of my viewers believe this too, understand this. And, we're going to counter trade all of these bulls that are so deep in this asset, right? Why is he in a car? Why didn't he sell his car to buy more Bitcoin? If he's that bullish, why didn't he sell his car and go buy more Bitcoin? Because he's not that bullish. And neither are any of the maximalists. And that brings us to other major red flags in the market. So as we talk about at the top of the market, we have to start looking for these red flags, right? These black swans, and they start to pop up and people ignored them. Terra Luna or Celsius, Voyager in the previous cycle, those were the first. Then Terra Luna went down. Then Three Arrows Capital went down. Then some other, companies and these projects started going down. And everyone's like, oh no, everything's great. Everything is totally fine. And then BlockFi went down. And FTX tried to buy them, but they didn't have the money. And I was like, wait, how is FTX buying them for $1 billion? But then they have to raise money. Because in September of 2021 or 2022, FTX was starting to raise money to buy BlockFi for $1 billion. And I'm like, wait, Sam Bankman said that they are worth tens of billions of dollars. So how do they not have $1 billion? Everybody ignored that. These were my worst performing videos. Now we're starting to see these things pop up again. Nevada has shut down Fortress Trust amid insolvency concerns as the U.S. tightens crypto custody rules. So the quick breakdown is Fortress Trust ordered to cease operations after Nevada regulators identified major asset liability gaps. Echoes of Prime Trust collapse, which cost users $80 million. And increased federal and state scrutiny signals tougher compliance demands for crypto custodians nationwide. And so they sent a cease and desist for their entire operations after uncovering signs of insolvency and poor financial management. Crypto Ninja reported Nevada just ordered Fortress to halt operations over insolvency risks. Regulators found a big mismatch between assets and liabilities. This comes from the same founder behind Prime Trust collapse back in 2023, shows that how tight the crypto rules on crypto custodians are getting lately. Now, people will say, oh, but Cryptoviser, it's not a big deal. It's not a big deal. Okay. Well, I don't necessarily agree, because all this crypto stuff, a lot of these regulators are not buying it. A court found Crypto.com sports contracts do not meet the definition for a swap and could impact other prediction cases. Following Kalshi's initiation of legal action against the Gaming Nevada Board, Crypto.com brought its own lawsuit claiming that the Commodity Exchange Act preempts state law and seeks to permanently enjoin the regulatory body and Attorney General's office from pursuing civil or criminal enforcement against the company for offering sports-related events contracts in the state. However, the court denied the motions from Crypto.com, paving the way for Nevada to pursue legal actions against the platform. So that's kind of where we're at in the cycle. And by the way, Coinbase, which stated previously that they're never, ever, ever, ever going to launch a coin, now their base token could be worth as much as $34 billion, according to JP Morgan. What should that tell you? Who do you think is going to be invested in it? Probably JP Morgan. So, yeah, what is going on here? JP Morgan analysts said Coinbase could unlock up to $34 billion in value through the eventual launch of the Base Network token, calling it a major new monetization path alongside the company's push into USDC yields and on-chain trading. The report, published by JP Morgan's equity research team, raised Coinbase's rating and lifted its December 2026 share price target to $404. Right now, it's around the $350 range. Citing emerging monetization opportunities and abating risks as the company leans further into the layer 2 ecosystem and stablecoin economics. But they said they're never going to launch a coin, and now they're going to potentially launch a coin at the end of the cycle, and we don't even know when they're actually going to launch it, or if they're going to launch it, or what the coin is actually going to do. What part of the cycle is that? The end of the cycle. It's all just liquidity suck. How can they make more money? How can they pull more money out of you? Because the only reason they're going to launch a coin is to suck money from their users. Why else would they do it? There's no point in it. Why did celebrities launch coins in 2024? To make money. I mean, hello. And then we heard this. Pump.fun acquires meme coin trading terminal Padre. Pump Fun continues its expansion in the meme coin trading stack and now challenges trading bots in what some investors are calling Pump.fun's Phase 2. So now we have more meme coins that do absolutely nothing. I just saw another report that Coinbase's base launched something like 800,000 meme coins in September or in October. 800,000 meme coins. These do nothing. They create no value. They bring nothing. This is the NFT craze, right? What are NFTs worth? They're worth a fraction of what they were worth in 2021. This cycle, the NFTs are meme coins. 2017, the cycle was new coins, right? We had all of these new coins launching, all these Bitcoin forks. Cardano launched. A lot of different coins launched in 2017, and they may be pumped in the next cycle, but they have done terribly this cycle. And so meme coins is the NFTs of this cycle. They have no utility, no value, no usage. There's no purpose for them. But meanwhile, they don't care, because the platforms like Coinbase, like Pump.fun, that are hosting all of these meme coins, they make money either freaking way. They don't care. They don't care. They make money. And so what do you think is going to happen in a bear market? They're going to lose all their value. People are going to be holding them. They're going to lose all their money. And that's the very few people that are actually trading or holding meme coins. And you can see this because Dogecoin, Shiba Inu coin, these have barely performed in this cycle. And they haven't performed because all the liquidity is in meme coins. And by the way, a lot of the liquidity is being sucked out by the meme coin trading platforms taking fees for the trading. That's why they want you to trade it, because they just make money off the fees. When people stop trading, they stop making money. That's what happened with Solana last year. Mike Dudas posted this. So Pump.Fun bought back $150 million of their Pump token with revenue in 3 months while using the $2 billion plus on the balance sheet to fund growth. But they don't buy the token because the mid-curve financial analysts are mad. It doesn't convey equity rights to you. Good Lord. I mean, they're buying back their coin to keep the coin pumped because if they don't, the coin collapses. But again, think about how much money they 2 billion plus on their balance sheet. That's liquidity suck from you. Maybe not you, because my viewers probably are not trading meme coins, but the people who are trading meme coins, they're losing money. It's going to a casino, making a little bit of money while the casino is really just, keep trading. Keep hitting that slot button. Keep hitting that slot button. Because, yeah, you'll win more. You sure will. You sure will. Meanwhile, the casinos are making billions and billions because you keep pressing that button. It's the same thing. There's no difference. It's just it's not a slot machine. It's meme coin trading. But the house is winning. And the people who are using the platforms, they're like, yeah, but Cryptoviser, this influencer said that it's great. Yeah, because the influencer's getting paid. You're technically paying them by trading on the platform. It's the same thing. Meanwhile, we have the strategy bulls now saying that MicroStrategy should get a 30-second Super Bowl ad for $8 million. Why? Not to get people to use their products, but to get people in the Ponzi scheme. Blast Stretch, which is one of the debt facilities from MicroStrategy, right? The debt facility, it has a 10.25% yield, which is changeable by the company at any point in time. It can go up or down. Easy ROI on that trade. They're literally telling you that this is a PONZI, right? Oh, blast this 30-second ad and get the masses to buy it so we can get rich and they can get wrecked. Use AI to help craft the most persuasive ad possible and back it up with numbers. So they're not trying to actually sell a real product with real value, right? Some people could say 10.25% yield is a good value, but I remind you, Celsius, Voyager, BlockFi, these companies in the previous cycle, they were giving 10% interest on your deposits of crypto while they were on the back end trading your crypto. What is the difference? Because when they sell you Stretch, they're selling you Stretch so that they can buy more Bitcoin in the MicroStrategy shares. And if MicroStrategy if the Bitcoin price goes down, what do you think is going to happen to the price? If these other Bitcoin treasury companies like Nakamoto and Strive and all of these other ones, if they have to start selling Bitcoin, what do you think that's going to do for panic in the market? Straight down. And what is that going to do for MicroStrategy's debt facilities? What is that going to do for the MicroStrategy stock price? But the maxis are saying, let's get them all in. And they're a 30-second Super Bowl ad. That is the guys, this is the part of the cycle that we're at. They ran out of ideas instead of creating a real product. And by the way, I don't know if I told you guys, like, I've been seeing MicroStrategy run ads for the actual software business, which they should have been doing for a while. And they should be pushing their software business because they need cash flow. Because in a bear market, and we will have a bear market, you can't just rely on the price of Bitcoin, right? Because people lose interest. People move on to other trades, which they're already doing. You could have made more money in the Bitcoin mining companies that pivoted to AI than you could have in 3 months, than you could have made it holding MicroStrategy the whole year and a half maybe. And so eventually these people are going to sell at a loss, or they're just going to be in a loss. Nobody's buying. Nobody is buying MicroStrategy, because if they were, MicroStrategy would be making larger purchases. They would be able to raise more money by selling more shares on the market. The only people who are buying are them. And now they want to take all the Super Bowl fans and in a 30-second ad, reel them in with 10.25% interest, which was the same exact interest rate that Celsius was giving on crypto deposits. This is, I think, the clearest tweet of what is really going on in these Bitcoin treasury companies. I would get out. If I still own MicroStrategy or any of these products, I would be out because they are going to drop. Meanwhile, as I was talking about the Bitcoin mining companies that pivoted to AI, Jane Street has updated their stakes in Hut 8 mining, Bitfarms, and Cypher mining. Now we're going to zero in on Bitfarms. Jane Street disclosed a 5.4% ownership, or about 30 million shares in Bitfarms. Now, why is this? Well, according to Kama Sutra, who is I would say a Bitfarms maximalist, he said the DOE, Department of Energy's new FERC directive, we'll get to that in a second, for flexible loads, energy loads, in the PJM is indeed a game changer for Bitfarms, a sentiment that I agree with Matt Siegel, who is the head of digital asset research at Van Eck, one of the large financial institutions. They currently have 3 sites in the PJM, all Pennsylvania, Sharon, Panther Creek, and Scrubgrass. I don't know what PJM stands for, but essentially, Matt Siegel, who is the Van Eck head of digital asset research, he said the Department of Energy's new FERC directive, which is basically this. It says, in a major development, the U.S. Secretary of the Energy just issued an advance notice of proposed rulemaking to the FERC that would take jurisdiction of large load interconnection across the U.S. and require expedited connection of flexible loads, basically meaning flexible energy loads, where you can add to the grid or remove load from the grid. So the DOE, Department of Energy's new FERC directive, could be a game changer for large loads in the PJM or Mid-Atlantic and ground zero for U.S. electricity bottleneck. Promised expedited grid hookups for large load flexible operations like data centers and Bitcoin miners could tip the scales in lawsuits versus FERC, potentially shave 1 to 2 years off typical PJM timelines, which are currently 3 to 5 years for full interconnection. And it's bullish for TLN, Bitfarms, and Node. And he said, it is my understanding from a conversation with Bitfarms that the Scrubgrass campus in Pennsylvania sits on only 3 miles from the Kinder Morgan's main natural gas transmission pipelines, the second largest system in the United States. A gas interconnection at Scrubgrass would dramatically cut the need for a costly 345 kilovolt grid tie-in, allowing Bitfarms to generate additional power on site using Kinder Morgan's feedstock, faster, cheaper, and fully dispatchable. That said, the DOE to FERC directive could make those 345 kilovolt hookups arrive sooner than expected. If the rulemaking sticks, Scrubgrass facility from Bitfarms might get queued up and energized faster. Either way, Bitfarms now appears to have multiple viable paths to scale. Well. What have we been talking about for well over a year on this channel? Bitfarms. What have we also been talking about? How Bitfarms is well positioned to effectively, transition to AI and HPC. And they have been doing this. And they've been doing this very differently than Iris Energy, than Cypher Mining, than TeraWulf. Now, I'm not saying that I'm bearish on those. I'm just not as bullish as I am on Bitfarms, right? Like I said at the beginning of this video, every trade is independent trade. Just because I'm invested in Bitfarms doesn't mean that I'm not invested in Iris Energy. Just because I'm invested in Iris Energy doesn't mean I'm bearish on Bitfarms, right? These are independent trades and have different risk-reward profiles. And the same thing goes for crypto, right? In my view, these are better plays as we're exiting the Bitcoin cycle. And by the way, these companies didn't just start, the AI and HPC thing because AI and HPC is the hot topic right now. They did this because Bitcoin mining companies in the previous cycle that didn't pivot, which was basically all of them, they all had major collapses. Some even went bankrupt because the Bitcoin cycle was over and they didn't prepare for that. And they all lost. We knew it was going to occur. When Core Scientific went bankrupt and the stock price went down to 5 cents, what were we doing on this channel? We were buying that stock at 5 cents. And even just an inter-month trade, it went from 5 cents to $1.50 or something like that. And we knew it. It was so obvious. Before Core Scientific went bankrupt, BlackRock and B. Riley, two major firms that are investment firms, they were like, don't go bankrupt. We'll give you the money to bail you out. And Core Scientific's like, nope, we're going to go bankrupt. And I'm like, why would they do that? They have the backing of B. Riley and BlackRock, and they're still going to go bankrupt. And then what happened when they went bankrupt? B. Riley and BlackRock stepped in and basically helped the company reorganize, and they made money. Everybody made money who was in that trade. So I am not wrong. I don't believe that I'm wrong. Maybe I will be, right? I'm not that confident that I don't think that I could be wrong. But everything that we see in this cycle is telling us that the cycle is effectively over for Bitcoin. Things that we were promised, all these companies are going to start buying Bitcoin. Technically, yes, but technically, no. And look at those companies now. They're all significantly down. This promise that these companies would be able to continue to sell shares on the open market continually and dilute all the shareholders, and there would be no negative effects to the stock price, to the investor sentiment, that was BS. The promise that the government was going to start buying Bitcoin didn't happen. No government really is buying Bitcoin. Even El Salvador, it's questionable. And so that's how you know the cycle's over. And then when you start to see videos like this, like saying, well, if you're going to sell right now, you're moronic to sell right now. Why? If I'm in profit, it's never a bad time to sell, right? It's never a bad time to take profit. And this idea that we're going to go to 200, 250,000, I'm going to lose. No, if I'm not in the trade, I didn't lose anything. In fact, I gained. But if we go down in the price, you lose automatically. And this idea that we're going to, we'll just pop back up. Yeah, who's buying? Who's buying? Because go look at the Nakamoto chart. Go look at the ASST chart. Go look at all of these Bitcoin these Bitcoin treasury companies that really haven't done anything besides buy Bitcoin and dilute their shareholders. Down 97% in 6 months. And you think that's not going to happen to MicroStrategy? Whoo, Lord. Guys, we are prepared. We are prepared because there is going to be a major crash. And when it happens, we're going to buy that market up. I don't know when it's going to occur, when the bottom is going to form. But this idea that the bottom of the market is at $111,000 or $108,000 is ludicrous. We're going much, much lower, in my view. And by the way, then we have the ASI, another promise, the Artificial Superintelligence Alliance. This was going to be the best ASI crypto in the world. It's been a complete disaster. This is why I've been so bullish on ICP, because they actually have real technology, they have a real network. But even ICP hasn't really delivered. They delivered one large language model. That's it. No major usage, no major adoption, big problem. And so this whole ASI implosion, go watch my video called The Artificial Superintelligence Implosion. Now they're talking about this is the start of the process. This is not agreed to yet, but basically they're talking about a potential deal between Fetch AI and Ocean Protocol. Fetch AI offers to drop their lawsuit if Ocean Protocol returns 286 million Fetch tokens that supposedly they dumped on the market. I don't know whether it matters or not. The point is, we're at the end stages of the cycle, and Geostaking said a community update, just to set expectations clearly. A working group of community members has now been established, and we're in the process of drafting a proposal aimed at helping both sides reach a fair resolution. To do this properly, a few questions need to go through correct legal channels. So they're going to talk to legal representatives. They're going to submit and receive responses from the Ocean team. Guys, this tells you it's over. Because all of these three projects that join the Artificial Superintelligence Alliance, this is going to take up all of their money, all of their resources, all of their time, and the community is just going to be drained. And they haven't created anything together. Like individually, there is some technology and technological advances, but nothing that has reached mainstream. Nobody is even aware. Most people are not even aware what ASI is. Most people are not even aware what Internet Computer Protocol can do from an AI perspective when ASI cannot do much of that. And by the way, Fetch AI is using ICP. But nobody seemed to care. Why? Because they're trading meme coins. because Wall Street is pumping meme coins and meme coin platforms. And MicroStrategy and all these Bitcoin treasury companies are draining the market by selling shares on the market. They're draining you. And the promises that we're going to hit 500,000, 1 million, 2 million, maybe in the longer term, but not in this cycle. It's over, guys. It is over. And so if you're not pivoting out of crypto, out of these Bitcoin plays and Bitcoin proxy stocks, in my view, it's going to be a loss and potentially a 100% loss, because the meme coins of this cycle, the meme coins are the NFTs of this cycle. And the altcoins, we've been promised for months, years actually, a few more months, and we're gonna have an altcoin season. Altcoin season's here. Altcoin season's about to happen, and none of it happened. None of it happened. And I'm not saying that we didn't have gains in the market, because in 2024 we did. We had a lot of big gains in altcoins, but most people doubled down at that point. They didn't take profits, and that was the warning in the cycle. The Bitcoin treasury companies is the second warning in the cycle. The Head and Shoulders is the third warning in the cycle. And there's not going to keep being warnings. At some point, the market is going to drop. We are at 18 months after the Bitcoin halving. We're in the complacency phase. Euphoria was in the middle of the year. And most cryptos are trending down. But we have people who are the most bullish they've ever been at the top of the market. Not me, probably not many of you. We're going to hold. We're going to wait and see. We're going to look for these black swans, like all of the government shutdown. Over, I think it said 40 million Americans are going to lose access to food stamps. And regardless of what your viewpoint is on food stamps and the fact that 40 million people are on food stamps, the point is, what do you think that's going to do for the economy, for people's need to eat? And that's what they've been relying on. It could be the black swan. And it's right around the time that we have had the historical end of cycle, which is the beginning of November. So we'll have to wait and see. Let me know your guys' thoughts. And by the way, the Federal Reserve lowering rates is not going to help those people that are losing their access to food stamps or can't get jobs because they're getting laid off. And a lot of other people are getting laid off at the same time, and companies are just not hiring. The rate cuts from the Federal Reserve are not going to fix any of that. It's not going to change the fact that people can't afford a home now. So if we lower 0.25%, now somebody's going to go buy a home. No. If they couldn't buy a home before, they're not going to be able to buy a home now. Anyway, I'll see you guys on the next video. Let me know your thoughts down below in the comments. Don't forget to give the video a thumbs up, hit that subscribe button, and as always, crypto on.